Hello friends, welcome to my channel and thanks for watching this video. So in the last 1 week, things have turned upside down and the fall in the market is indeed increasing. So with this note, I'll welcome you all to another very important as well as interesting session of USA Weekly Market Report series. And there are a lot that is happening. There are huge number of data points which are yet to be seen for this month as far as Wall Street or the US stock market is concerned. So let us discuss all the important highlights, what has happened in the last 1 week and what will probably happen in the next 1 week going forward. So let us start with all the red things that we can see, and over a period of time there is no denial that the US market or US indices, major indices rather, is going down and there is no strength left as of now. So we have seen the cracks. Whenever interest rates started moving higher, it comes with a lag effect. It does not things does not happen simultaneously, but it comes with a lag effect because over a period of time, uh, you know, policies have changed and market rules and regulations will change depend upon the money supply. Yes, so here we are. There are some cracks which has already been seen in the two major banks. I mean, whether you are calling it a major banks or a smaller banks, whatever. But the thing is, cracks have been seen. Now, I am neither in this camp that these are only two banks and US economy is much bigger than that, and neither I am that camp that who are saying that it is just the starting. Okay, let it see how it comes. Okay, and uh, prima facie this is not good. Okay, this is not at all good. That's the most important thing we need to understand. Apart from that, market pricing swings back to quarter point Fed rate hike. So the recent developments, obviously by the Fed members, shook the market in the short term, and the jitteriness in the market comes back again. I mean, from 25 basis point rate hike to 50 basis point rate hike, and there are some strong data points. And when the Fed chairperson comes and say that what is their intention, and they are specifically looking at 2%, that's the absolute number that they are looking at. Forget about the economy, forget about the stock market, forget about demand and supply. Let's just crush the inflation, crush the economy, then we will see how it comes. So this is the kind of scenario we have. So things are, I mean, when you are getting a huge amount of yields or the interest rate now, even in US, if you are putting your money in your bank account, you can simply get 4 to 5% return over there. In a 6 month bond and 1 month bond, you will get 4 to 5% return. Then why do you invest in stock market? I mean, for the short term, not for the long term. So there are lots of things, as you can see, as treasury yield rises, the global stocks have yields of over 5%. 5% is a very big number for the developed economies. More specifically, if you are compare this yield 1 year ago and right now, you will see a huge amount of difference. Silicon Valley Bank is shut down by regulators in biggest bank failure since global financial crisis. So I don't want to talk about it. Yeah, we will see how the chart behaves, and that's the correct way. I mean, as far as I am concerned, that's the correct way to deal with the numbers. Because with this headline, one can come up with lots and lots of opinions. You have your own, I have my own, so rather not to discuss about that, because you will say something negative, I will say something negative. Out of 10, 15 or 100, there is hardly one who can at least say something positive, but whether it will be a logical one or not, that is questionable. So it is very hard to find logical positive reasoning. Okay, what's next? What's next? US payroll rose 311,000, so more than 300,000 in February, more than expected as job growth stays hot. So a good economy is not at all good for the stock market. This is the summary, this is the headline, which simply means there are more to go on the downside. Okay, more than $70 billion wiped off crypto market in 24 hours as Bitcoin falls below 20,000. There is a bounce back that we have seen in the last 2.5 months, but then again it looks like a dead cat bounce. I'll discuss about that. But as far as the big trend is concerned, those who are watching my previous videos or follows me, I have specifically said that uh, 4,000 to 6,000, this is the number. uh, that's the big target which one should look at as far as Bitcoin is concerned. Apart from that, let us see what else we have. Okay, so let's now go to the numbers and let us see how market is indeed behaving or has behaved in the last 1 week, and what's going to happen. So Friday was not good, neither the last Thursday. So as far as Friday close is concerned, Dow Jones down by 345 points, Nasdaq down by nearly 200 points, S&P 500 down by 56 points, gold up by 38 points, now trading at 1872. This is a pure trading play. I mean, those who understand how to trade gold, they would have made lots and lots of money in the last 1 year. I can simply tell you because the swings on both the side are very clear. If you just play one side, even one side, either up or down, you can make good amount of money. Then we have oil, which is trading in between 70 and 80. That's the range. It's become a range for oil in the last 3 or 4 months, so there is nothing to talk about it. US 10-year yield is in between 3.5 and 4%. VIX, this is the most important part of the puzzle. VIX is now or closed at 24.8. This is huge. I mean, I always talked about 15. Now it is trading at 24, which means there is more to go on the upside. I will discuss about this as well in the chart. Apart from that, yeah, let us look at the yield. Now 6-month yield stands at 5.13%, whereas the 2-year, the 10-year, which is quoting at 3.7, 30-year, which is quoting at 3.71. Then why shouldn't I invest in 6-month yield on which I'll get 5.13% yield? Okay, rather than investing in the stock market, because this is risk free and I know at the end of the day I will get the exact amount of return. And this, I'm not talking about 10-year or 30-year, I'm just talking about 6 months. So this is something which we need to understand. US dollar index, instead of volatility, it closed strong because 104 or 103, 104 is the range that I always talked about, and that's the level which one must look at if it has to go higher or if it has to fall slower. So this is the number. So this is another thing which we are going to discuss in this particular video. So there are lots of things which we will see as far as US stock market is concerned. So let us start with S&P 500 because I have already opened the chart, and let us discuss with this. Now as far as the big trend is concerned, I have discussed about that in my previous videos, but for this week, because we are looking at the next 1 week, so I don't want to go big. Just stay focused and let us see what will happen in the next 1 week and what's the range that we are going to look at. Now 4,100 has indeed become a huge resistance for S&P 500, and S&P 500 fails to surpass that specific level. Now what's the deal? If you are looking at the price action, so here we are, if you are indeed looking at the price action, this is the range which we are going to look at as far as S&P 500 is concerned. So on the upside you have 4112, and as far as the downside is concerned, it will be in between 3643 and 3500. Right now it is definitely heading towards, yeah, we are 3786, which is your next support. Then we have 3728, and after that we will move towards 3643 and 3500 with a stop loss or resistance at 4112. So you can clearly see the momentum which has been building, and if you are thinking that there will be a bounce back, even if there is a bounce back, it will be sold into, because the thing is, we have seen the big headlines are saying something else, and there are big cracks in the stock market. So I mean, in the short term the confidence is not there, so if you are expecting any big bounce back, it will not happen. And those who have taken shorts, there are big shorts which are involved in this market, and they will not let the market go. So that's the thing. Now the next one will be Dow Jones. So let us see how Dow Jones, I mean, last week it has already closed below the support zone. So a trend breakdown has indeed happened, because for the last 2 months Dow Jones, or rather 3 months, Dow Jones has been trading in between a range, and last week there was a range breakdown, and for the last 3 or 4 consecutive sessions we have seen a big crack. So you can clearly see what is going on as far as Dow Jones is concerned. So below 32,650, it is now moving down, and if you are thinking about the next move, then let me show it to you. Now I mean, there is another phase of the market. Whatever I am discussing based on the current market sentiment and current market numbers, if the sentiment changes somewhere in the middle of the week or somewhere next week or after 2 weeks, things will completely change. So that's something which we also need to understand. Anyways, we are going to discuss what market is telling us. We will change our view when market said so. So as far as Dow Jones is concerned, there is a very this is a level, a very small range, or a particular number which I'll tell you will act as a very near term support, which is 31,770, but it hardly looks like a support. So if Dow Jones somehow manage to sustain above 31,700, then you can expect a very short term bounce back, but it will not change the trend. Otherwise, the next couple of support we have are 30,698 then we have 29,696 and 28,725. So these are some of the numbers which now opens up for Dow Jones. Talking about the Nasdaq, the more fascinating one, everybody looks at Nasdaq because huge volatility, which means huge money involved. Now if you are looking at Nasdaq comes back into the range after the false breakout, and the way the market shaped up, it is not at all giving you an indication that market is in a mood to move higher. Okay, so this is what we have as far as Nasdaq is concerned. So let us see what Nasdaq is telling you. Nasdaq enters into its previous range, and now it is heading south. So with a resistance or stop loss of 11,528, Nasdaq is moving towards 10,282 and 10,112. These are going to be the next two big supports. So overall, there are big downside that has already been opened up, so beware. That's the one word I will say to all of you: beware. Don't take unnecessary positions or decisions in the short term, but this is a golden chance for those who always talk about long term, and I am a long term player, I mean, those who are genuinely long-term investors or those who are fake long-term investors, whomsoever they are, but this is an opportunity which one must look at and which one must seize, because we don't know when the market turns. Maybe after 1 month, maybe after 1 year, but whenever it turns, the kind of momentum we will see will be phenomenal, and at that time you have nowhere to hide. Right now everything is going down, and that time everything will go up. Okay. The next one, the most important one, the dollar index. How is it, and what will happen going forward? Because dollar index right now trading in the crossroads, as you can see. Let me show it to you. Let me zoom this, and yeah, we are. So now you can clearly see the dollar index chart. I mean, this is one of the most important, not only to define the US market, but the markets across the globe, because this is the reserve currency as of now. So on the downside we have 104 and 104.2, and on the upside we have 105 and 105.7. Let me tell you, once it started trading above 105.7, it will be a breakout. Okay, so just look at this one, this position. Beyond 105.7 it will be a breakout. In that case it will move towards, there will be two big targets after 105.7. once the breakout happened, it made a breakout, but then again it falls down. But if the breakout happens, the next big move will happen towards 108 and 110. So this is something which one must look at, and the way the trend shaped up is quite positive. I mean, although there has been a downside move that has happened, but the way things are shaping up, it looks like a big bounce back is yet to be seen. So that's something which we need to look at. So the dollar trend overall is very, very positive. I would say very strong in this particular market. Now, Bitcoin has indeed made a move, but is it enough? That's a question which one must ask. And I have specifically said or talked about the breakout and posted the image. But as far as the current scenario is concerned, here we are. It is still holding above the breakout level. That's the good thing. Okay, it is still holding above the breakout level. So if it continues to sustain above 20,000, it is fine. Once Bitcoin started trading below 20,000, things will change, and change big time. So this is the point which one must look at. If Bitcoin started trading below 20,000, you can see, let me show it to you, what was your previous trend and what will happen if if Bitcoin started trading below 20,000. So this is what will open up in the upcoming months and years. So this is another scenario. I am not drawing a negative picture, I'm talking about the probabilities. So if Bitcoin started trading below 20,000, so this range will open up in between 6,000 and 7,000. So this is something which looks very, very risky. So be very specific and be very aware about the move. Don't take irrational decisions. And looking at the market sentiment, it is nonetheless very good to wait and watch rather than putting your money and burning your hands. So this is something which we understand. Now there is another way to look at it. You can clearly see a range in between which Bitcoin has been moving for the last I would say 8 or 10 months. Here we can see a big range. So you can also consider the range, and based on the price action, if there is a breakout above 25,000 or 26,000, you can go higher. If it falls below 16,000, you can go lower. So that's another scenario which we can look at. Yes. Now the most important or next, but the most important thing is VIX. Now VIX is something which is the most important part, and if you don't understand VIX, you can clearly see it shoots up to 28 and it settles at 24, but nonetheless uh, it is a very big spike that we have seen. And even if we are not looking at a financial crisis kind of scenario, but as far as the targets are concerned, or as far as the upside is concerned, the VIX may swung up to, or the range that we are looking at for VIX will be in between 34.95 and 41. So this is the range which we are looking at, and you can clearly see whenever VIX started moving higher, so we have more to go on the upside. So this is another way to define the market move and define the market trend, a probable potential peak or potential trough. So this is another way to define the move, and we can clearly see what VIX is indeed telling us. So on the upside we have 34 and 41, and on the downside we have 19 and 17. So for the next 1 week, it's not looking good. More than a number, market number, and more than the trend, the sentiment looks bad. And understand, stock market is never a game of money. Money and power is there. They are the people, those who have money and power, they are making the market. That's true. But if when you are talking about layman, or when you're talking about the theoretical part, it's all about the psychology. It is not at all a science, more than an art. Why? Because you are buying and selling based on your behavior, based on your feelings, based on your thought process. And the person who is sitting next to you or in front of you, he or she is doing the same. So we are playing against each and everybody's psychology. So it is very important to understand the psyche of the market. Okay, what people are thinking. I mean, I have been talking about recession, which is very much clear as far as the numbers are concerned. Let me show it to you, the chart again. But there are various veterans I have seen. I mean, I'm watching interviews time and time again. So they are saying, they are trying to forecast that no, this is not going to happen over a period of time when there is an inverted yield curve, which has been there for the past 5, 6, or 7 months. I have not said a stock market crash. People correlating uh, an economic recession with a stock market crash, because that's what has happened in the last instances. But things have changed. Beyond a certain point, even Fed will reverse their decision. Everybody knows that, because it does not. I'm not specifically talking about Fed. Central banks in any part of the world, if their economy and stock market, more specifically, if I'm talking about the stock market, if it goes down beyond a certain point, they will definitely overturn the decisions, because beyond a certain point they can't even control the damage. So they don't want to do something which is you know a situation which will not in their hands. And when it overturns, things will overturns big time, so they know that. And when there is a clear cut chart which is available, an indication available, I don't understand, why are you forecasting bullshit? Why don't you talk about the actual numbers? Economic recession is there. You will definitely feel the heat, and 1 more % hike, and it will definitely come with a lag impact. So in the next 6 months, people will start feeling the impact, the heat in their pocket, because that's where there are lots of things which have spiked very big time, and there are lots of things which will get spiked, the prices of which will definitely get spiked in the next 6 months. So you will definitely feel the heat. People will definitely feel the heat, and companies will make them so that's something which has already arrived. Some of the things which you have already seen, some are yet to be seen. But what is there in the data, what I can see in front of it, and I'm not talking about that. I'm talking about what was happening and what will happen. So what about the present? You are talking about the past, and more specifically you are talking about the future. What about the present? That's what I have been talking for the last 3 4 or 5 months, because looking at the job payroll number, the job number, it looks extremely hotter than people are expecting. This one, okay. So it looks extremely hotter, which is, it is good for the economy, but it is not at all good for the Fed or for the stock market, because they are simply looking into inflation numbers. So until and unless it comes down, they push the economy into recession, they are not going to stop. And that's what they are saying. And this time people are not believing them, because they have their repo like this in the last 10 or 20 years. So people are not believing them. But there are certain events, if it goes beyond their hand, they can't even control it. So let's see how they will balance the situation. If they are extremely, I would say, disciplined about that 2% number, then make sure there will be huge amount of job losses. There will be a big crisis which is looming, which nobody is expecting. If that happens, if you are chasing that specific or strict number I'm talking about, then, or they have said, this is not my number, 2% is not my number, okay, that the FOMC is chasing, then obviously you will see some big cracks, not only stock market but also in the economy, big time. And economy will feel the pain for the next 10 or 15 years again. So that's another thing which we will also see. But this is what I'm forecasting. This is not what I'm talking about the present. What the present is telling you, that there is a big probability of a recession, economic recession. Now how much it will translate into a stock market crack, that is yet to be seen. I am not in a view that that will happen. It's not going to happen like 2000, 1999, 2000, 2002, and then 2007, 2008. It's not going to happen in that fashion, because uh, there are political scenarios, because next year you have US elections, and then even the FOMC don't want to, because the US economy is very much reliable, or majority of them are reliable on the stock market, so they don't want to crush the market beyond a certain point. Otherwise US economy will go in doldrums. It will definitely go in dungeons if they crush the market. If Dow Jones if S&P falls back to 2000 points, then obviously you will see a huge impact, you will see a huge cry, not only in the market participants but also into the government. So they don't want to do that. Anyways, things are not looking good as far as the next 1 week is concerned, and it is more of a sentiment factor. The sentiment has been shaken in the short term, and let us see how quick it will take to revive. So this is the end of the video. Thanks for watching.